So we're post FOMC last night, and just really having a look at the aftermath of, well, really the bloodbath, I suppose, when you're looking at the equity markets. They've been taking an absolute kicking today and really starting to gather speed after 3 o'clock this afternoon. So let's just have a little look at that, actually. I mean, this is what happened really at 7 o'clock. This market had that little bit of a, well, blip, if you like, at 7 o'clock there on FOMC. Started talking about tapering, started talking about reducing that quantitative easing there. Market then really started to die, and we gapped down considerably this morning there on the DAX. So from there into a point where the market just kept going down and down and down. Now, the natural inclination for traders is to think that this is the time to buy, get in while it's cheap. This is a really bad way to think about the markets. Today in the workshops, we had a workshop today from 8 o'clock till 9 o'clock, and what I said was, be really careful about what we call the dead cat bounce. These markets should be sold into. You sell the rallies. This is where our continuation strategy comes into play. So what do we look for? We're simply looking for sort of patterns of lower highs and lower lows. We can illustrate it really well by actually having a look at the higher time frames. Now let's refer to the 4-hour chart. You see the red line here? This is telling me the path of least resistance is down, telling me I should focus rather more so on the short side. Let's refer to the hourly chart. Again, that red line telling us that the path of least resistance is down. Again, telling me that we should focus on the short side. So what we're looking for from our entry point on the 15-minute chart in this case is that resumption of that short trend. Opportunity number 1 here at 11 o'clock. Opportunity number 2 here at about 12:45, so just before 1 o'clock there. So there's the trade. 79.80. Got a really nice risk reward on this trade too. We're expecting prices to fall to new lows, and you're looking at putting a stop just above that 80.15 area there. It's about a 35-point stop with a target zone of at least 40 points there. So just better than 1-to-1, which is pretty typical for a continuation trade. And we're looking at that pattern of lower highs and lower lows to really continue. And all we're looking for is to jump back onto that downstream and look to see if this market can take us further down. Gold picks up a little bit first of all, and in fact tests quite strongly back from our entry very, very quickly indeed. It's where those emotions start to come into play, but of course my stop's above 80.15, right? So we're still in the trade, and now it starts to hold steady, starts to gather speed here post 3 o'clock, 3:15, 3:30, and here we are now. We can see that market really falling and falling very, very quickly. The fact of the matter is there is a right way to trade the market and a wrong way to trade the market. If you're trying to buy these indices today, then that is very much following the bad way, and that's trying to buy something because it's cheap, expecting that it's going to bounce. What you should be doing is harmonizing the market, looking at those higher time frames and looking at where this market's more likely to go. The continuation strategy we have here at TrendSignal is simple to use, very simple to follow, and very easy to implement as well. So just looking for that resumption of the trend, entry, and you can see how the market's then gone on subsequently to hit our target. We sell low, we buy it back lower, and that's a great example of that. And we've seen lots of examples of that today as well. A lot of those currencies spinning off, a lot of the indices spinning off in the same way. Lots of good profits to be had.
If you would like more information about trading the right way, TrendSignal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the TrendSignal website for the latest events and to book your free place.